Hey guys, it's Canadian Kyle here at the Wealth Holders Podcast, where we conduct long form interviews with mining companies, industry experts, and other small cap stocks. People are an important factor when looking at these investments, and we try and ask the right questions about the company. But we do have this recurrent segment, and it's called The Vault. In The Vault, we ask mentorship like questions, questions where these guests, they're amazing guests, and they don't get the opportunity to pass down their lessons. So we ask these mentorship like questions, and it's my favorite part of every interview. But The Vault is not available on YouTube just yet. It's available on Apple Podcasts and Spotify, but until I get my subscriber count up, guys, on YouTube, they will not be available. So make sure to like and subscribe. Thanks. Now, it's important to be able to connect with management and have that trust in them, and they need to be able to prove and execute as well. But you need to have a relationship and really trust that they're going to do what they say they're going to do, which brings me to this month's sponsor. We have Electric Royalties. They trade on the TSXV under the ticker ELEC. Now, I interviewed Brendan Urich, which I recommend you go check out. The recent interview, he talks about all the progress they've made in 2021. They've been doing well, but what I think really sets them apart is that they are focusing on a huge suite of metals that will be required for this electrification movement. They got cobalt, graphite, lithium, manganese, zinc, vanadium, and more. I'm not familiar with another royalty company that focuses on all these commodities. Now, full disclosure, I do have a position in electric royalties, so please do your own due diligence. But Brendan was the CEO that I personally connected with, so I decided to put my own capital on the line because they have been executed, and I don't think the market has realized quite yet what they have. Now, you might not connect with Brendan and think electric royalties is not the investment or speculation for you. That's okay. Maybe it's today's guest. So, without further ado, let's get on to the show. Hey guys, it's Canadian Kyle here at the Wealth Holders Podcast, and today I'm joined with Brent Cook. Brent founded Exploration Insights and is currently the senior advisor for this well-respected newsletter. Brent, how are you doing today, and where are you calling in from?
Hey, good to talk to you finally. I just came from Zion. I'm now in Del Mar, California.
Sorry, where's Zion? Where's
Oh,
that?
sorry, that's where I spend most of my time. It's in Southwest Utah, right next to a national park,
Oh, very nice.
sort
Cool.
of high desert.
So, Brent, I like starting off the interview asking my guests the same question. What were they doing when they were my age? I'm 25 years old. So, what were you doing from 20 to 25?
Oh my God, that was a while ago. Let's see. During that stage, I just left my first job as a uranium exploration geologist in the Colorado Plateau. Um, was doing some reconnaissance exploration through the Pacific Northwest US. Got married and took off uh, to the South Pacific. We stopped in Tahiti, Cook Islands, Fiji, New Zealand. Took about 9 months, landed in Australia,
Wow.
and during a mining boom. And so, landed broke, of course, and ended up spending 6 years in Australia working mostly in the east side of the country, looking for gold, copper, and tin in the outback Australia. My wife was my field assistant, and
Okay.
so that's sort of how what I was doing back then.
Very cool. So yeah, people that don't know you, the younger listeners out there that might not be familiar with you, you sharpened your teeth being an exploration geologist, right? So my younger brother, he's an undergrad in geology, and I just want you to be a spokesman for a career in geology. And could you share us a good story or two, an adventurous story, or why a young person might be interested in this field?
Well, I guess as a youngster, um, my father took us camping all the time in the summers, and I just always had an interest in how the Earth got to look how it looks. How did this happen? Same with the climate. Like I've got a minor in climatology and a degree in geology.
Okay.
Um, my goal was just to see as much of the earth as possible. I didn't really think about, how to make money, but when I got out of university, obviously I had to make money and took up a job, and it's been great. I mean, I can't think of a better job if you're anxious to see the world as it is, see the outback, see places nobody goes, um, and endure the ups and downs. I mean, I've been through a number of booms and busts in this sector, and if you can survive that, if your partner can deal with that, and you being gone for weeks to months on end, I can't think of a better thing to do.
Wow, great. Thank you. And you mentioned you need to make money, and I think I just like to learn about my guests and what their philosophy and what they think. And I think it's a good question to ask. What's your views on money and wealth? Because we are in an industry where there's a lot of people looking to get rich quick.
You can certainly do it in this sector. The ones that get rich quick are just straight out damn lucky, or in my view, a lot of conniving goes on. It's not probably one of the biggest problems with this sector is it's easy to lay out a story that sounds really great with a lot of technical information and such, that your average person who hasn't done this for a decade or two doesn't really understand the underlying assumptions and data. So I think, it's that's one way to make it. I think I've probably done it the slow way, which is just concentrate on, the geology, the facts. I've been lucky enough to go out and see projects very early on and recognize they had a shot at becoming a real legitimate deposit, or more importantly, often recognizing that this will never work and staying away from them. Um, so I took the slow way, but it's worked. And again, it's money. Money was never that driving force. The driving force for me was knowledge. Just wanted to understand everything about the earth.
Yeah, a real rockhead.
I guess so. Yeah.
So at Exploration Insights, you're all about early discovery, high reward, right? That sweet spot. And we are just talking about money and how people might be drawn to this space to make a quick buck. And a lot of young people could be drawn for that 10 bagger return. But really, what is the likelihood of getting a 10 bagger? And who should be investing in this space, this early exploration space?
I think if you're going to really, and I think it's speculate more than invest in this
Yeah.
space, you need to have advice. You need someone who knows the sector, knows a lot of the people, understands how it works, and all the fatal flaws that come with this. And that could be your stockbroker, a brother, some relative, a newsletter, that sort of thing. I think that is pretty important. Now, when the sector is rocking, it sort of doesn't matter what you buy, in a sense. Um, but over the long run, the more you know, I think the better you do. Although I see a lot of people do really well uh, buying things that really aren't real, just based on a fantastic sounding drill hole, but
Hmm.
not recognizing that, this hole has been drilled before. Someone's twinning a hole, or they're misrepresenting the grade distribution, that sort of thing. And again, when people are piloting the sector, when gold's rocking towards 2,000 an ounce, those sorts of things can do really well. Joe, who writes Exploration Insights now and is a really experienced geologist, economic geologist and such, he focuses on that sort of thing. So he'll sort of stay away from those sorts of plays.
Hmm. One way I think's a good way to de-risk in this space is prospect generators. And I know I had Rick Rule on, and I know you were a consultant for him before, right? And you're also a big proponent of the prospect generator model. care to explain what that is and the typical life cycle of a prospect generator? Like, what does it look like compared to an exploration stage company that goes into production?
Yeah, the idea behind the prospect generator is you're recognizing that your odds of any single property becoming a success are really low, particularly in the early stage exploration. And so rather than diluting your share structure and shares holders on one project, you farm those out to a major company who has the financial ability and technical ability to bring it forward and evaluate it. And so you continue doing that. In the end, you've got 5, 10 projects being worked by someone else, and the odds of one of those turning up good or great. And if it happens, your share structure still has not been diluted by spending or raising and spending millions of dollars on something that's ultimately going to fail. So that's the idea behind it, and it works to a degree. It's not something I mean, I own a few.
Hmm.
I'm very selective in those, and done really well on a couple, really, really well. And I think the biggest advantage to the prospect generator model is the people running these things in general understand geology, and they'll recognize an early stage project that they might not want to venture out. They might want to put more work on. If the results continue getting better and they're seeing, this is looking like we might be onto something, they can keep 100% of that. And if it works, the benefit to shareholders is immense because they haven't diluted their shareholder share structure by failing on 10 previous projects. So I think that's the real advantages. Um, Having someone smart run it that knows when to drill their own property
Hmm.
and when not to.
And the length or the life cycle of it, how does it perform over time, just so young people can get the idea of what to expect from this type of speculation?
They're much less volatile because they're not risking everything at once, so they're much less volatile. It can take like I had Virginia Gold is one that I held for 10 years, bought off and on and was down. He must have done 25 joint ventures and finally made a discovery in Ontario, Northern Ontario. And at that point, I think he only had like 45 million shares out after 10 years. And that stock went up to, I think, what was it, $9. And he spun out the royalty on it into, Virginia royalty. And that added another $5 to it eventually when that was bought. So I took a stock. I think I paid 95 cents for it and ultimately
Wow.
got $15 for it. But it took a long time.
Hmm.
It
So
takes time to make
patience.
a discovery. This is really science. You test, uh, revise your theses, test your theses, revise it, etc.
Hmm. Yeah, for sure. And it takes time. So with that being said, with things taking time, I want to really talk about newsletters because I don't see many people actually talking about newsletters in the space. So why don't you go ahead and explain what investors need to be aware of or speculators need to be aware of when choosing a newsletter or even choosing one? Some people might not want to spend the money, but if you choose the right one, it's really worth the money.
I think so. I think in general, you get what you pay for, um, and that's true with most things, right?
Hmm.
Um, and you need to understand how the newsletter writer makes their money. There are some who are sponsored, and a company will pay them a retaining fee of say 3 to 5 thousand bucks a month to always talk about their company whenever they're on TV or on Kitco or at a various show, some Zoom meeting. There to talk about those companies. Others make their money by getting early stage placements in these companies and then talk about it later uh, when it's bring it up to higher price. And there's others that are completely revenue based on, how many people will pay for it.
Mhm.
And then there's some like Exploration Insights who are run by where I'm now, Joe and myself, Joe Mazumda now, and its revenue model is basically we make our money on what we buy and sell, and that's what the letter's about, is what we're buying and selling and avoiding. That's where we make our money, and that's what we sell to people and lay out exactly our thesis, the geology, why we're buying it, what we're expecting, and then follow it, looking for that fatal flaw. Um, and that's what our letters or his letter is about now. Um, and I think we tried to get the most honest letter we could, where we're tied to our subscribers. If we win, they win. We lose, they lose.
Mhm.
And it's, just for, everyone's information, it's $140 US a month, and it comes out every Sunday. Plus, there's alerts, comments, etc., that come out when necessary. And that price hasn't been raised now for 12 years, despite current inflation. You've just kept it there.
Yeah, and people stick around with your newsletter a lot, right?
We don't get a lot of turnover. Yeah, we
Mhm.
don't do the big promotional goals going to $5,000. Here's this little stock that's got the best thing in Nevada you've ever seen, and push that out to everybody. Most of the subscribers we get come from talking to people like you, and word of mouth. We're pretty low tech in terms of
Mhm.
promotion.
Yeah, for sure. I was surprised. I just found out about that a week ago about the one newsletter method where they get in early in a stock and then they promote it. I was shocked that happens, but it's amazing.
Yeah,
Wow.
yeah.
So I'm curious. What are your thoughts on selecting investments in hot areas? Like in my mind right now, I'm thinking Newfoundland, where there's a gold rush happening now. What are your thoughts on your neighbors making good drill results, and care to chime in?
Yeah, certainly Newfoundland is the hot place right now with newfound gold and their discovery, which is a legitimate discovery. It's way, way, way overvalued in my opinion. At what, $1.5 billion? No resource. They've got a couple of shoots of very high grade. And I was looking at trying to figure out what this thing really looked like. And the DNA helix, where it kind of spins and joins up
Yep.
between the spin. That, in my mind, is kind of what this thing is looking like. So it's very complicated to shoot running down like that, very high grade. Um, we and people I communicate with in the industry have got between a quarter and three-quarters million ounces in there right now, which is nice, good grade.
Yeah.
Um, Other, Marathon and Atlantic Gold, they've managed to pull together large low-grade deposits. Very erratic mineralization, very shooty. Um, it's definitely a gold rush. We don't own one company up there because we
Oh
haven't
no, hey,
seen
nothing.
nothing. No, it jumped too fast. And you get these area plays, and so someone will say, we're on trend, and make a big deal of it. Well, maybe, maybe not. I remember when I was working in New Guinea, and Lihir was found, um, which is a 30 million ounce deposit on an island. There must have been 10 companies who would draw a line between Lihir and wherever their prospect happened to be and say, we're on the trend. It's like,
Yeah.
I don't think so. You can be 10 kilometers away from one of the best deposits in the world and be on a completely different terrain, and there's
Nothing there.
absolutely no chance of hitting anything.
Yeah. No, I agree. So Brent, when you find a good discovery or a good company or a good play, I'm curious about your portfolio allocation. Now, me being a younger retail investor and not much capital to work with, I like being more concentrated, and I don't even have many exploration plays. I like early stage royalty companies where I can get the leverage there and de-risk. But I'm worried young investors take this concentrated approach with exploration plays and put too much in something that they think is a home run. But I'm just curious, do you have hard rules with your portfolio allocation? Like, this seems like a no brainer, but I'm only going to put 10%, 5% of my portfolio in there.
Yeah, through I've learned the hard way. You're never certain. You can never be
Mhm.
certain on exploration plays. Um, so I'm pretty cautious. And the newsletter, Exploration Insights, Joe tries to limit it to 20 companies max, and that's a mix of early stage exploration, some mid tiers, um, prospect generators, copper, gold, silver. We sold our lithium, nickel. We've got nickel, and we're scattered across the world. The DRC, Vietnam, Australia, Nevada, Peru, Argentina, um, Cote d'Ivoire, scattered around the world in terms of what we own and the projects we're involved in. So I think we've got different diversification, but I think the younger you are, the more risk you can afford to take.
Mhm.
But always bear in mind, this is speculative money. It's not something that it's not your house payment.
Yeah, yeah, exactly. I was surprised. 20 companies, not that much still. Like,
No, I mean, honestly, if it's really, if you're more than that, it's not. You can't realistically cover them in the amount of detail you need to, because you need to talk to them. You need to understand the geology. You need to go visit. Until COVID hit, we were hitting 30 projects more or less, property visits a year. Um, Certainly, those early stage ones, the more you can get out and see them, the more you can recognize what the issues are, what the fatal flaws are probably going to be, what the geology is, and it gives you the context to understand what the drill results actually mean if you've been there and know weather drilling and such.
so has COVID affected your investments at all? Or are you investing because are you able to get boots on the ground? Like here in Canada, I'm a little out of the loop here with the rest of the world. We're pretty locked down still in Ontario.
Um, until, well, last year, I guess, 2020, I visited a number of projects in Nevada, Idaho, Utah. But that was it. Really, I could have probably gone to Mexico, but there wasn't anything down there, and I really didn't feel like getting on an airplane at that point. Joe visited projects in British Columbia and Ontario. I'm hoping to get out and see a lot more this year as the world opens up. I've been vaccinated, so I've got a card.
Hmm.
Um, but yeah, I hope to get out and see it much more, and so does Joe. I mean, we've got projects in Alaska I could probably go see now. The Vietnam project is probably off for a while. I need to get to Australia, but they're still, not letting people in very easily. So it's picking up slowly, but slowly.
Yeah, it's still slow for the exploration. And wasn't getting drill results back too taking a while?
Almost certainly, the drill results have been taking forever
Hmm.
because lab protocol, lab shutdown, et cetera, et cetera. It's taken at least twice as long as it did pre-COVID.
So, Brent, I want to get your opinion on cycles and where we are at in the current cycle, because a lot of people see us in a big commodity super cycle now. And I have never been through cycles before. I'm new to this. I've been here for 4 years. So, with a man with more experience and seeing a lot more cycles, where do you see we are? Like in a couple years, do you see it being rather stagnant? Like what time horizon do you have on this?
Well, with the caveat that nobody really knows what's
Mm-hmm.
going to happen next year. It does appear to me that we're in an inflationary environment, and that commodities are becoming more and more valuable. The prices are going up for sure. I think copper is going to continue to do well. Gold and silver, I think, are going to continue to do well. Nickel is certainly one I'm keen on. Uh, Platinum group metals, for sure. Those sorts of things are going to do well because there's really, ultimately, there's a real shortage of supply. Um, the demand is there, but the supply is dwindling because the time it takes to actually make a discovery, drill it out, do the technical work, go through the permitting, environmental, social issues, all that sort of thing is dragging out more and more. For a tier one discovery now, which
Hmm.
is something a major would want to own, you're looking at 10 to 20 plus years from discovery to production. And that's really going to affect supply.
And your thoughts on uranium? I know a lot of retail investors are really interested in that space right now.
We own one uranium company, Energy Metals, or Energy Fuels, sorry. Um, and yeah, I can see that. I can see the excitement about it, and it's one that most newsletters are all
Hmm.
excited about. It's not something that we think is going to really appreciate in price. I think there's so much uranium on the books that when you get to 40, 50, $60 are going to come online, be profitable. And I don't see the shortage in uranium uh, as I do in copper and nickel and gold. So it's not something we're big on, although we do own one. And it's done quite well, actually.
Like all of them.
Yeah, sometimes you get lucky.
Yeah. Right, right, for sure. Um, what about how do you decide to sell? What's your theory on selling? Is it a
That's
percentage? Do you just take off the initial investment or
that's a really important question. It's a lot easier to buy than sell,
hmm
because usually when something's going up, everything's going up. Um, and so what you got to figure out is, if I sell this, what can I buy that's better? What's
right?
better out there? So that's the one thing I always look at. Is there something that's got more potential? Second one, we try and put together some sort of cash flow analysis of what this may mean, what the net present value would be, and what another company would be willing to pay for it. And when things get to be pretty expensive based on those metrics, we sell. Um, I'm okay letting someone else make the last whatever percent on it. Um, we did well. We got what we wanted, and we're gone. We're going to move on to something else. So that's sort of how I do it. And I also will take some money off the table when things are doing well on a early stage project, provided the results are aligned with that. I mean, I have no problem also adding to a position at double the price if the results continue to show it's increasing in value. But generally, I look at it, if I'm sitting at the blackjack table, if I start winning, I just throw a few coins in my pocket just to
hmm
I can walk out of there with something.
Yeah, exactly. And what about with a specific commodity? Like let's say well, with uranium, for example. Like I had an investment in uranium and I got like 300% in 6 months. I just got completely out of it. I'm like, it's what are your thoughts on that? Because uranium, a lot of people are saying the price could go up to $60, but then, like you say, what's the upside in that investment if it's already
Yeah,
increased?
I see no problem taking money off the table at 300%.
Mm-hmm.
I
Mm-hmm.
mean, really, that's what more do you want?
Yeah. Like for the specific commodities though, like I'm just trying to figure out like copper. How do you know where we are at in a copper cycle? How do you know gold? Gold's at a nice price now, but a lot of people think it's going to go higher. But I'm just trying to figure out the theory behind commodity investing in general with the cycles.
Yeah. Well, I guess that comes down to your macroeconomic viewpoint,
Yeah.
what you think's going to happen. I'm sure you read a lot of stuff, and so you've got a sense of what the copper market looks like, why the price has been going up, why it will probably continue to stay at this level or higher. Same with gold, with the inflation and the debt and et cetera, et cetera. Um, all those things to me suggest these prices are going to stay where they are or continue to go higher.
Hmm.
So that's how I look at it. But you can read stuff that says the opposite as well.
Hmm.
But I think it's important to realize that there's a lot of people out there who have names and get interviewed a lot who are preying on this gloom and doom scenario where the
With
world's going to
precious
end.
metals.
Yeah, particularly, yeah.
Hmm.
I can think of someone in particular. 30 years has been predicting the end of the end of the earth, basically,
Hmm.
and gotten really rich off that, and it hasn't happened. So, you got to be. I think that comes down to your own personal research and what you see um, is happening down the road.
I heard this saying once, and I like thinking of it like this. It's not panicking if you're the first one out of the room. So you might lose some of the game, but nothing wrong with a good return.
Yeah, exactly,
Hmm.
exactly. There's always one of the first guys that I got to know in this sector, in the stock sector. His was, the analogy that there's no called strikes. This is, you wait for your pitch and then you take it.
Hmm.
You can let whatever as many go by, but there's always a new idea coming your way. There's no shortage of those, and just wait for the right one. There's no
Yeah.
one's got a gun to your head.
That investor psychology is hard for the younger people. I have friends too, and even me, I find like you find a good investment, but you don't put money in and you get this fear of missing out. But you're well positioned in the stocks you're well positioned in, but I find it hard sometimes. You see, oh geez, I should have got into it. Look at it flying
Yeah,
high.
that still happens to me.
Hmm.
Dang, I looked at it. I thought that looks pretty good, but uh, and then it just takes off. You go, dang, that's
Hmm.
always going to be the case. Um, but as long as you're in ones that are working and
Hmm.
you're confident with, that's, I guess, it's confidence. Some of the other ones you missed because you weren't confident. Something about it didn't work for you.
I want to
Whether
get
that,
your opinions on something that it took me a while to realize, and I'm trying to bring it to light to my audience more too, is warrants and how companies get financed. Because you would say, "Oh, great deal," but why is my stock going down? The news is getting better. More than not, it's warrant clipping going on. So, what is your opinions on all these companies getting investments and financing through warrants?
yeah, that's a good point. Another one I learned the hard way. Um,
Hmm.
you need to understand the share structure of the company you're looking at, especially these smaller ones. If they raised 5 million bucks, issuing 15 million shares, um, at call it 10 cents, and the stock's at 15 or whatever, there's probably and the people that bought these units are not steady there. You're going to look at a lot of stock hitting the market probably.
Hmm.
And the company itself, their goal is to keep the share price out. So they're going to time their news releases to, just ahead of when the warrants come due to try and get those exercised. And that may include not just news releases, but heavy newsletter promotional campaigns, that sort of thing. So there's a lot more to it than just looking at drill results. You understand the underlying workings of the shares, who owns the shares, who's going to bail, flow through shares. That's another one that's even worse. As most of those, more often than not, people buy those for the tax advantages in Canada,
Hmm.
and you can just get nailed on those because the people that selling those, they don't really care if they lose a bit of money on the share. So Yeah, that's key. That's one of the key things you need to understand is what's the share structure
Right.
of a junior company.
And share structure aside, I had a Terry Lynch on at Save Canadian Mining, and he was talking about short selling in this space. Is
Mhm.
it really that prolific? Like, do you see it as a huge problem? Like, you're in the exploration stage where it is these small, less than $100 million market cap companies that you're investing in, right?
Mhm. Um, I know it's an issue, but it's not something I spend a lot of time trying to understand. So I can't comment too much on it. I know it's an issue, but the intricacies of it, I don't spend
Hmm.
time.
Yeah. Just trying to figure out what moves stock prices because there's so many things that move these small companies' prices around. So I like trying to learn as much as I can for what's the cause of why it's going up or down.
No, that's a good point. You know, is it a newsletter pump?
Hmm.
Uh, is there drill results that are real? Yeah, what's going on?
Hmm. Yeah. Well, thank you, Terry. Or sorry, not Terry, Brent. I think it's time for the vault. Now, this is a recurrent segment we have on this podcast. It's to gain mentorship advice from my guests, but it won't be available on YouTube. I'm trying to gain my subscriber count. So, guys, make sure if you like the conversation to like and subscribe. I release these every Saturday, sometimes more, but I'm trying to be consistent every Saturday. So, Brent, let's get into the vault.
Research. I think research and understanding, particularly now with there's so much out there you can read on the internet that will support any idea you want to support.
Hmm.
Go to the original data and look at it critically, not just in mining or exploration, geology, science, politics. Figure out what the truth is. You know, I
Yeah,
think certainly in the United States, that's a real problem. Um, People go down their own little rabbit hole, and it's not good for them or the society as a whole. I think it's really important to understand how things work.
I agree. Rick, when I had him on, he said that my generation would do really well in investing because we don't trust and we do have all this technology at our fingertips that we do go to the source and we can learn and research the proper way.
Yeah.
Again, you could do it the wrong way though, and you can get burned. But
Well, it's amazing. I mean, the whole world is right here,
hmm,
right?
yeah,
Potential. So why not use it?
yeah, no, I agree. Well, thank you, Brent. This has been awesome. Really appreciate your time sitting down and talk to me. But I like letting my guests close off. So here's your chance. Say whatever you want. Just close us off, please.
Well, I don't know who's listening. Apparently, a lot of young people. Good luck. It's a great life out there. And I should mention again, Exploration Insights, Joe Mazumbu's letter. If you're keen on getting involved in this sector, go to our website and see what's there. And thanks, Kyle. I appreciate it.